Hi there, I'm James Strode, publisher of the Global Legal Insights to Fund Finance. Joining me today is Wes Misson from Cadwalader, head of the Fund Finance Group and contributing editor to the Pink Book. Wes, great to see you.
James, very good to see you. Thanks for having me.
No, pleasure, my pleasure. I was reading your Fund Finance Friday review from December time prior to meeting today. You painted a positive picture, origination on the comeback, easing around pricing, lender diversity up, so on and so forth. Tell me a little bit, just looking back, at how all of this has impacted your role as counsel over the past 12 months. What were your learnings in your private practice role, and what's been important to your clients over the past year?
Yeah, certainly, James. It was a story of opportunity and resilience. Opportunity for new players in the market to fill a void for underserved bank segments of funds, and also, to be able to expand their portfolios. Resilience in the sense of, finally overcoming the 2023 regional banking crisis and a number of the headwinds we've seen in the macro environment, getting some easing on interest rates, a slight uptick in fundraising also helped turn the page, although we'd certainly like to see more of that. And the theme of the year for most clients on new origination was hustle. Fewer opportunities for the larger deals, particularly on the subline side, that led to a more competitive, crowded market. But many players were able to still have extremely positive years. Most of our clients were up based on bilateral deal volume and/or massive amend and extend activity on their existing portfolios. And so, I think we all feel like we weathered a storm, and there's smoother sailing ahead.
Yeah, good stuff. That's brilliant. Using the recent past as an indicator, what stood out to you as some notable trends in the market with potential impact for legal structures or transaction types going forward?
Yeah, so I think three things I'd point out here. Continuation funds being one of them. It's been a theme. It's going to continue to be a theme. On the GP-led side, the muted fundraising environment we've been in, in part driven by fewer exit opportunities in this high interest rate environment, and the resulting slowdown in distributions going back to investors has resulted in GPs needing to hold, so-called trophy assets for longer. To be able to extract more value. And so the continuation structures as a result have been at an all-time high. And, as GPs are continuing to look to engineer that liquidity for investors. The second thing, and this is, obviously there was a landmark transaction this past year. There's a lot of talk about it, and I think there's going to be a lot more activity coming. Cash securitization of capital call lines. A number of factors have been driving the interest in the securitization market for the fund finance asset class, and particularly subscription for some time. Capital requirements for banks, demand for liquidity by sponsors, growing demand from institutional investors who are looking to invest in the fund finance market. And as you can imagine, the traditional securitization folks are really kind of licking their chops to get into a market that has nearly $1 trillion of addressable assets. So we should see some growth in that segment. And then lastly, I would, related topic, but something certainly to mention as it's been, a huge growth area the last couple of years, CRTs. The need for capital relief trades for banks, particularly in the US and Europe, has led to the rise of these synthetic securitizations, CRTs, SRTs, depending on what you call them. And we estimated this market on the subscription asset class to be about $30 billion plus last year alone. And so, a lot of positive momentum on that product.
Fantastic. Well, look, you've touched on a few potential trends and positive pieces there. We're well into 2025 now. Trump administration has kicked its tenure off over in the US, and there's general business positivity around that. But there are still those macroeconomic and just wider geopolitical issues that still linger over us. So I'm not going to hold you to this. But any particular predictions you want to fire out for 2025?
Yeah, let me get my crystal ball out and see what I've got here, James. Look, I think we're going to see accelerated growth with, primary support coming from deregulation as a theme and lower energy costs. I think this could be a positive potentially for PE deal volume. M&A activity picking up. It's going to be a better exit environment, more distributions going back to investors to hopefully fuel the next vintages of funds. One of the hot topics out there that everyone wants to talk about right now too is further introduction of tariffs by the U.S. I think this could be interesting from a PE perspective because it could present some reshoring investment opportunities. But ultimately, what does this mean for fund finance? I think in 25 and in the new administration and this entire geopolitical environment, I think we could see a mix of the prior 4 years combined. And what do I mean by that? I think, you're going to see, volume on new origination continue to ramp up, but doing that at the same time that you've got all this innovation on the asset-backed, the CRT, and the securitization side of things. And so I think it's going to be a very interesting and sophisticated mix going forward for fund finance. This higher origination volume could come from banks solving for loan growth without that regulatory overhang that we've seen over the last couple of years. And banks are also empowered right now by lower deposit costs and a steeper yield curve. And at the same time, the evolution of the industry is pressuring lending groups to both broaden their product offerings while also optimizing the balance sheet. So it's setting up to be a very nice year.
Good stuff. Well, look, we can refer back to this interview when you sit down to write your 2025 year in review in December coming, and see how much is right. But let's turn attentions to what's going to be the 9th edition of the Pink Book, the Global Legal Insights to Fund Finance for 2025. Your contributing editor, Cadwalader, the Cadwalader team have authored some great content for this upcoming edition. I'll pass it back to you just to introduce this upcoming and live resource, so you can tell everybody what to expect.
Yeah, James. Look, I think we say this every year, but certainly mean it that this is going to be the best Pink Book ever, and I don't know how we keep outdoing ourselves, but I think a lot of that goes to all the wonderful contributions that we get from the best people in the industry, right? And apart from the slightly new, fresh look to the printed and online versions that you're rolling out, the content continues to evolve with it. We've got excellent global coverage once again with 19 jurisdictional insights, providing the latest data and trends within these submarkets. There's also 31 product and market-oriented chapters this year, which include evolution on some of these key fund finance topics we've touched on already around sublines, NAV facilities, secondaries market, pref equity, and enforcement. There are regional overviews and comparisons. This is alongside industry intersections such as securitization, the M&A market, and the emergence of private credit. And then we've got some new hot topics this year, which we're excited about. We're going to do some in-depth dives on pref equity, CFOs, ratings within the industry, and there's also a Cadwalader piece around financing evergreen funds. So, it's certainly a jam-packed edition and the best one yet. So get your hands on it.
You did well there, Wes, to run through all those topics and chapters. Much appreciated. I want to take a moment just to pause and actually just thank you, because not only have you and Cadwalader been a big supporter of the Pink Book, we appreciate that as well. But actually this year, sometimes it's hard to create an evolution of a book, right? At the end of the day, we're helped in part because of the industry we're in. But you and I sat down back in the summer and we said, what can we do? And one of your ideas was just about trying to make the publication that little bit more accessible. And I'm proud to present what we're calling the industry viewpoints. So opening up the publication is going to be just a couple of chapters written by industry participants from JP Morgan and Everbank. They're less technical. but they provide some wonderful thought leadership, and they provide some wonderful history and background to the industry, which is, as I say, brilliant for the new entrants into the market, and also, as I say, wonderful thought-provoking pieces as well for everybody else. So I want to thank you for coming up with that idea, and obviously thank the authors for putting their time and effort into that as well. So do look out for the section, and let us know your thoughts, everybody watching this, once you have read those two articles. So yeah, thanks again, Wes, for coming up with that idea. And as you say, we continue to evolve, and I think it's the best year yet as well.
Yeah, well, thanks again, James. I know the effort that you and your team put into making this the best guide in fund finance, period. And we at Cadwalader and the entire market, I know, truly appreciates it. So see you in Miami, and also looking forward to the sunshine.
Yeah, absolutely. See you in Miami as well. Thanks again. And everybody watching this, don't forget, soft copies, hard copies will be available in Miami across all the Fund Finance Association platforms as well, and free online at our website too. So yeah, look forward to it. Thanks again, Wes. Take care. See you soon.